Daddy is very much home. Elon posted overnight, and there's more to that story. And we have so much today. Hang in there till the bitter end because I'm telling you what we have this morning will definitely give you so many insights into where the economy is going, where the markets are going, what Tesla is doing. But yeah, like I said, a whole lot. Maybe we can get all of this done in 20, 25 minutes, and you'll be ready for the day. Let's go. Investors Business Daily continues that post from Elon Musk. He said he is burning the midnight oil. He said that Friday, with the Optimus humanoid robot engineering team, that's where he was with the Optimus team and deep technical reviews. And then Saturday, he was planning for the Tesla AI 5 chip analysis. And he said the AI 5 chip will be integral for upcoming products and integrated artificial intelligence. So Elon Musk giving us his daily routine. That's a new one. But again, I think what he's trying to say is that he's concentrating. Sounds like he wants us to vote for his comp package. What do you think? So the Tesla CEO also said that Monday he walked the Tesla Memphis-based Colossus 2 data center, and then he reviewed transformer and power production progress. Transformer and power production, I guess at Memphis. I guess that's what he's talking about. Maybe. Then he, quote, then up to 12 hours of back-to-back meetings across all of Tesla departments, but with particular focus on AI, autopilot, Optimus production plans, and vehicle production. Tesla's insurance registrations, by the way, we got those in, and they totaled 15,350 for the week of September 8th through 14th. That's up more than 7% from 14,300 last week, and it's also the most so far this year. And that included, well, I don't care how many Model Ys and 3s and anything. There were so there was only 894 registrations for the longer wheelbase Model Y out of that group. So I'll give you an idea. That was less than what was expected by various people, but got to remember, maybe some of those are going offshore. So not sure what that means in terms of the ramp, not sure what that means in terms of what else might have been being shipped overseas. Tesla Model Y sales in China continued to fall last month. Model Y retail sales in China came in at 39,413 in August total. That's down 13% compared to a year ago. And again, you got to remember that anytime they look at these numbers, it could be down in China, but that could be because they shipped a lot more elsewhere. 11 weeks into quarter three, Tesla registrations in China, a rough gauge for deliveries, are up around 30% compared to the last quarter, but have dropped 11% for the total year. And Okay, Sawyer Merritt has this. William Blair analyst Jed Dorsheimer has a new note out with Musk's Tesla stock purchase combined with the upward momentum for delivery expectations and the robotaxi rollout. We are becoming more bullish. This purchase is Musk's first buy since 2020. To us, this sends a strong signal of confidence in the most important part of Tesla's future business, robotaxi. They say that they recently participated in a meeting with Tesla's board of directors to discuss the details of Musk's performance package. The board is confident of its position in the Delaware case, and it anticipates a verdict by the end of the year. It doesn't expect a similar situation like they had in Delaware to occur in the new Texas jurisdiction, so they a lot more confidence there. Musk's has the board's full support, and we expect he'll get more than enough shareholder support for his soon-to-pass comp package. Barron's says this morning, Tesla's recent run caught the attention of CFRA analyst Garrett Nelson. He downgraded the stock on Monday, writing the stock's valuation has become decoupled from fair value and underlying fundamentals. Tesla stock is trading about 164 times estimated 2026 earnings, according to FactSet. Nelson maintained his $300 price target for shares. This guy thinks that we're never going to see 300 again, not even close. Overall, 45% of analysts covering the stock rate the shares a buy. According to FactSet, the average buy rating ratio for stocks in the S&P is about 55, so we're still under that average. The average analyst price target for Tesla right now is $323 a share, as we're sitting about $100 more expensive than that. More than 50 analysts cover the company, and only a few major brokers have price targets above the stock's closing price on Monday. The top 5 targets range from 440 to 550, and the bottom 5 range from 120 to 220. Coming into Tuesday's trading, Tesla stock was up about 2% for the year and up about 81% over the last 12 months. Brett Adcock says this morning, he says, big news, Figure has exceeded $1 billion in their last funding round. That's putting them at a $39 billion post-money valuation. So Figure Robotics is now worth $40 billion. How about that? This is Randy Kirk. You know what to do. Later today, regular day, as far as I know, we're going to have Nicholas Gibbs, which you guys love more every week. His numbers are up higher and higher every single week. And then we've got Brian White, which keeps us all laughing, of course, but also very interesting information. I can't wait for this show to come out. All right, Tom Lee and I on the same page, like right down the line. I don't care that. I do care about Ethereum. I do care about Bitcoin. He spends a lot of time on those two because it's a big part of what he's doing. But he says small business, financials, home builders are going to benefit from the Fed cut tomorrow. I'm not suggesting anything that you do in terms of trading, because most of you are going to be very heavily invested in Tesla. So I'm not suggesting that you go start trading in the Russell 2000, or that you start trading in the small caps or the home builders. What I'm saying is that these are I've been saying over and over again. Manufacturing, which is tons and tons of small businesses under 500 employees. The financials, tons and tons of small businesses, including the small banks. Home builders, tons and tons of small businesses. All of these people are going to benefit from the cut in the Fed, especially if we get a promise of more. We got to get the promise of more. That's going to be critical tomorrow. That's what he's saying. Of course, he's saying that the Bitcoin and Ethereum are going to go way up, like way, way, way up. He's also just gotten it right about the S&P getting over 6,600 this year. That is now a true story, and we're now getting close to 30 all-time highs for the S&P this year. The Motley Fool comes in this morning. The landmark partnership between the United States and the United Kingdom, called the Atlantic Partnership for Advanced Nuclear Energy, is seeking to speed up the development and deployment of nuclear energy products in both countries. The list of projects to be inked include multi-billion-dollar deals, including plans to build up to 12 advanced modular reactors and develop data centers powered by small modular reactors in the United Kingdom. They are recommending, Motley Fool, is that you buy 𝐘𝐻. I have been watching 𝐘𝐻. I don't have any investment in 𝐘𝐻, but if I was diversifying, I might have some investment in 𝐘𝐻 right now. This seems to be a stock that's going to do very, very well over the next couple of years. It says, although most of the deals are between private companies for now, the partnership will open the UK market to US nuclear energy players, potentially paving the way for billions of dollars in investments between the two countries. Okay, here we go with all the big news this morning from the economic indicators. Advanced estimates of U.S. retail and food services sales for August up 0.6%. It sounds like the consumer's doing just fine. That's up over the 0.3 that was expected from the previous month and up 5% from last year. And that, of course, the up 0.6% in 1 month would suggest a 7.2% annual rate. I don't think we're going to hit that rate, but that's 0.6%. Retail's doing just fine, thank you. Now, that's not going to make the Fed happy, but oh well. Total sales for June 2026 through August 2025 were up 4.5% from the same period a year ago. The June 2025 to July 2025% change was revised up from 0.5 to 0.6% last month. Retail trade sales were up 0.6%. So same thing. And then non-store retailers were up 10% from last year, while food service and drinking places were up 6.5 compared to August of 2024. Retail sales less auto were up 0.7%, a huge beat compared to the 0.4% expected. That would be an 8.4% annualized rate. I mean, yeah, retail is doing just fine. Thank you very much. Import prices did increase 0.3% in August. They were only expecting a negative 2%. Now, I suggested a negative number as well, so I did not get this one right, assuming that this makes any sense. Now, this was compared to a 0.2% in July and a decrease in June. But now let's take a look at the details. Fuel imports. Import fuel prices decreased 0.8% in August, following an increase of 2.5% in July. Then we go to in August, prices for let's see, I'm sorry. Then we go to all imports excluding fuel, increased 0.4% in August, following no change in July. The August advance was the largest monthly increase since a 0.6% increase last April, which was fueled by, of course, tremendous amounts of tariffs. Oh, no, it wasn't. Higher prices in August for consumer goods, non-fuel industrial supplies, et cetera, with feeds and beverages and all that were up 0.9% on a year-over-year basis. A year-over-year, only 0.9%. Higher prices for non-fuel industrial supplies and materials and capital goods more than offset lower prices for consumer goods and automotive vehicles, lower prices. This is what I predicted. So you got to get into, and as well as for lower prices for foods, lower prices for feeds, lower prices for beverages, lower prices. Yeah. So you got to look into the details. Industrial production ticked up by 0.1% in August after decreasing 0.4% in July. So that's good, but manufacturing output rose 0.2% in August after edging down 0.1% in July. But within manufacturing, the production of motor vehicles and parts increased 2.6%. Now that's really up a lot, while factory output elsewhere edged up 0.1%. But capacity utilization maintained the same rate of 77.4% in August, a rate that was 2.2% below its long-run average of 79.6%. So yeah, this capacity utilization thing is troubling, but it's good to see that manufacturing is edging up. And then we've got by industry groups, manufacturing output increased 0.2% versus a negative 1% expected in August and was 0.9% above its year earlier level. Capacity utilization for manufacturing ticked up. Did I get that? Did I do that twice? Oh, capacity utilization. We already did talk about that. All right, good. Then breaking news, builders sentiment. Okay, this is home builder sentiment levels remained unchanged in September, but lower mortgage rates and expectations the Federal Reserve will soon cut led to higher future sales expectations in the coming months. Builder confidence in the market for newly built single-family homes was 32. That's just a number. Unchanged from last reading, Association of Home Builders said. While builder sentiment has hovered at a relatively low reading between 32 and 34 since May, builders are expressing optimism that a more favorable interest rate climate could bring hesitant buyers back into the market. Quote, while builders continue to contend with rising construction costs, a recent drop in mortgage interest rates over the last month should help spur housing demand. NAHB expects the Fed to cut the federal funds rating at their meeting this week, which will lower interest rates probably. Doesn't mean that the 30-year fixed or the 10-year fixed will go down, but it has gone down. The 30-year fixed rate mortgage average is down 23 basis points over the past 4 weeks to 6.35 per Freddie Mac, and 6.25 is about where mortgages are right now. In a sign that housing markets remain soft, the latest HMI survey also revealed 39% of builders reported cutting prices in September. So if you're looking to buy a new house, now's a good time to do it. up from 37% in August and the highest percentage in the post-COVID period. Meanwhile, the average price reduction was 5% in September, the same as it's been every month since November. The use of sales incentives was 65%. We're using some kind of incentives to get people in the door and making a deal. All right, Trueflation this morning up 2.28 overnight. That's high, but 1.68 year over year. The PCE year over year number at overnight number at 2.04. That's a good number. POTUS, the President of the United States, got another big number, 51.36 in the overnights after almost 53 last night. But still at 48 over the 5-day average. So the previous 3 days pulling it down. Now, what do you think could have happened? Here's what I think happened. The Charlie Kirk thing, people started reading how wonderful he was over and over and over again, which gave them some confusion because they thought he was such a monster. Oh, so they started watching the actual videos instead of the cut up stuff that they've been receiving from people on X or watching the news, etc., watching CNBC, MSNBC, etc. So instead of getting the lies, instead of getting the made up stuff, they went and looked at the actual videos of Charlie Kirk talking or Charlie Kirk debating people, and they said, wow, this guy looks pretty good to me. What's everybody talking about? And then they go, well, wait a minute. What if people are also lying about the President of the United States? They would never lie about his statements, would they? Oh, well, then they went and started looking at some of the stuff the president was saying. All of a sudden, we're getting a lot of people red-pilled. A lot of people are getting red-pilled right now. So what about the stock market? Well, the stock market is as flat as you can, like a pancake flat. And what we have is Tesla, though, up 1.7%, $417.24. Continuing up and to the right after everything. I mean, it's just continuing. We could 428, 440. Actually, 440 is my next. That's kind of the next level that I think it's going to struggle with on its way to all-time highs. The 440 and all-time highs, both in the potential for October 2nd. We've got the Magnificent Seven mixed with several down, but it's all fairly narrow. Amazon and Apple are up kind of nicely. Oh, I'm sorry. We've got the VIX sitting at, where'd it go? Oh, I had it in my eyes right just a second ago. Well, here we go. It's at 1616, a little bit of a tick up this morning. I mean, it's still really, really strong, but up a little bit over 16. And then we got the Cathie Woods mostly down this morning, but starting to tick higher. Everything is, again, mostly you got flat. That's what you got right now. And let's go ahead and see how bonds might be impacting any of this. The bond market is unchanged. It's been unchanged for a little while now. We are sitting at 4.034. Very, very much poised. Obviously, if we get the 25 cut tomorrow, I think we're going to see bonds at 3.95 like that. It'll be just overnight. We've got oil up a little this morning, up 88 cents. We got Israel bombing ports again. We've got the oil, the Ukraine bombing Russian oils. So it's not surprising at all, but it's still at $64. So it's not really very bad. Natural gas up 1.68%, a little bit over $3. It has been so close to $3 now for 2 weeks. I do know that there was some reason to believe that there's oversupply right now. So surprised it's actually up 1.58 this morning. Gold up 1842. Okay, everybody together now. All-time high, 3,737. Silver up 0.81 at 43.31. Silver apparently has, according to at least one report I read this morning, it has a long way to go because it needs to catch gold. I don't necessarily think that's true, but both of them obviously day after day all-time highs. Copper down a tad at 4.66. And we have got the dollar mixed. Do I say that every day or only almost every day? And we've got Bitcoin down 280, 115,000. We've got Ether at down 0.129, I'm sorry, 1.29 at 4,439. That would be everything that you need to know about the markets this morning. And then what you need to know is that later today, it's going to be Nicholas Gibbs, phenomenal analyst, been right so often this year. He absolutely called this increase that we're going through right now. Now, in order for him to finish it off, and Randy to finish it off too, he says that there's no resistance. Now that we've broken through all those other resistance levels between 400 and all-time high, there's no resistance. It's just like, just go straight up. All right. So we'll see if Randy and Nicholas continue to be right on that. Of course, Randy believes we're going to go right through that, assuming we get a few more catalysts in the area of FSD and or we really need it all. We need to get FSD. We need to get the robotaxi catalyst. And if we do, I think we're going to go back to all-time highs and beyond, maybe to as high as 1,000 by the end of the year. All right, and then after that will be Brian White. As I mentioned, I already know how good that show is, and you want to watch it. Last night, we had Brian White. That would be part one of a series. Okay. And so if you want to see the whole series, then you want to go back last night. I'll put the card up for Brian White for last night. Now, obviously, you might want to go back and watch the Larry Goldberg analysis also because you always do. But that already it's approaching 10,000 views. So I'm thinking you already did watch that. But Brian White, it's going really, really well. But I think a lot of you missed that one. So that's the one I'm going to put the card up. That's all I got for you right now. You want me to look at Tesla just real quick? Okay, I'll take a look real quick here. Tesla is now up 1.65. That's about the same as I said a minute ago, 1.65%. That's all I got for you right now. It's been great talking to you.